now we will start with the book launch of the evening. So request guests who have come to attend this interesting book launch on stock market and investment to kindly take the seats in the event area. About stock market investing. With the new financial year starting, ladies and gentlemen, this is the right opportunity for you to pick up those questions on stocks, shares and financial investment and get them all cleared today. We will have the who's who from the Kotak Securities here to discuss on the book and also clear all your questions that we all common man have on shares and investments. So please don't miss this opportunity. We'll start with the launch in another few minutes. Thank you. Good evening, everyone. We will start with the book launch of the evening, and I would request Nibedita from Reliance Timeout to give a small introduction on the book and the honorable guest speakers for the day.
Thank you. Good evening, everyone, and a very warm welcome to Reliance Timeout. At Reliance Timeout, we aim at doing both entertaining and educative book launches, and today's book launch is an attempt in that direction. It is an honor for Reliance Timeout to launch the book, Everything You Wanted to Know About the Stock Market Investing, published by CNBC TV 18 in association with Kotak Securities. After witnessing the phenomenal rise in the prices of stocks over the years, despite large and small dips in between, it is now commonly accepted that the stock market is the best place to enable one's fortunes to grow. But what is less accepted is that it is not complicated. There are many people who simply refrain from investing because they are afraid of the jargon that they hear. Others are cautious because of the stories of losses which is floating around. Still others are just not in the market because they lack the time that needs to be invested in understanding the markets. This book covers everything from the financial planning and asset allocation to the steps that will launch you into equity trading and the process involved in purchasing shares through an IPO. It introduces you to the techniques that will help you select stocks, explains how you can undertake fundamental analysis and use technical analysis. The best part about the book is it is written in an easy to understand language, understandable by all. So first let me introduce our chief guest here. We have the honor of having with us Mr. B. Gopkumar, who is the executive of Kotak Securities, with overall experience of 15 years in sales, marketing and relationship management. We also have with us Mr. Shrikant Chauhan, who is the Senior Vice President Technical Research, Kotak Securities Limited. He's been with Kotak Securities since 10 years and has an overall experience of 15 years in broking industry. So I would like to request Mr. Gopkumar and Mr. Shrikant Chauhan to unwrap the books and to start the book launch event.
Thank you, Nivedita. Now I would request Mr. Gopkumar and Mr. Chauhan to share their thoughts on the book and what they feel. And obviously, you are the best known people today on this topic.
Thank you very much. Sorry, the mic is- Thank you very much. It is. We've been doing this launch in a couple of bookstores. I think this is the second launch what we've done now, and a couple of stores has become a super sellers, top four top sellers. Just before getting into a few things about the book, let me take you through the reasoning why we did this book and why you guys need to buy this book. Just to take you to the background of the investing, there are a couple of things. Um One is that what is important is that when you start investing, basically you have four asset classes to invest. One is equity, debt, commodities, and real estate. If you really look at the retail investors, they largely look at two asset classes, which is equity and debt. And people put money and debt either through mutual funds, which are debt fund schemes, or fixed deposits. When it comes to equities, people get scared. So people participate through equities through mutual fund, direct equities, or through a quasi-equity products like structured products and all these products. But I think largely the retail investors looks at two products, which is largely direct equities and mutual funds. So there are, what we are trying to attempt in this book is that there are few jargons which we go through in the day-to-day life when it comes to financial market. We have made sure that this book demystifies all the smaller points, which is written in a layman's language. If you go through any bookstores, largely you find these type of books available. But good thing about the book is that we have made it in a workbook style. We have demystified the large languages. Most of the time when I look at retail investors and they watch all the business channels from morning to evening, and I don't understand what do they understand in that. So one of the time when I asked one of my retail investors, do you understand what these people say? But most of the people don't understand. But you really look at the TRPs of these channels, they're really very high. They run almost from 9 to 5, unlimited in every offices at every homes. So we try to find that how do I teach them, or how do I give knowledge to them and understand how to invest in the markets easily. So that's what the attempt is all about. And if you really look at the way the markets have changed since last 15 years, I think when you started investing 15 years back, we had a ring system where only the elite crowd participated in the market. I think not even any retail investors had dared to go and invest in these markets, mainly because it was very highly transparent and it was only with few individuals. Then came electronic trading, and it was somewhere in 2000, and we immediately jumped into internet broking, which is that then you had a lot of retail participation coming in. Today, we already have launched the mobile trading. If you really look at the revolution, what has happened in the equity markets and the participation, what happened in terms of retail participation, it's really gone up. That's because of technology. And even the technology is ruling our worlds now, our lives now. I think what is important is that people are not aware that how to invest in the markets. Most of the retail investors say that do I want to do a mutual fund SIPs, or do I want to do a direct stocks? I think people are completely confused. So our objective of launching this book was very, very clearly saying that that there are three people in this markets. For example, there is a regulator, there is exchange, there is a brokers like us. What we're trying to do is that we need to educate people, and we need a new set of investors in the market, which are pure retail investors who are far away from the markets. And then that's the attempt what we're trying to do. And this is the first attempt in terms of education program. And we have a couple of new programs what we'll go through the full year. Our attempt is to attract new set of investors. Coming to the regulators and the regulator and exchange are now trying to educate investors who are already equity investors in the market in terms of looking at how transparent the brokers are and doing a lot of education programs to the retail investors. I think our role as an intermediary and being India's largest stockbroking house, I think our objective is to make sure that we educate people in equities. So I'll not take much time, and I will give it to Shrikant to take over from me. and we obviously will take few questions. Please don't ask the stock tips. Before going to stock tips, obviously you need to read the book and come back to and ask us the stock tips. I think we'll try to attempt to answer as much queries as possible regarding the book and the markets, and we have Shrikant who can able to answer us on the market side. All yours.
Yeah, thank you, Go. As a representative of Kotak Securities and as a team member of this book, as a team and as analysts who have shared this, their view in this book, I would like to say that we have spent almost more than 14 years, 15 years in this market. And coincidentally, we all have spent more than 8 years with the Kotak. Here I am to say here is that the level of thinking, the level of understanding is much higher. We have very good team, and whatever the thought process that we are always in the process, that only we have discussed in this book. One day when we discussing about the investors and traders, that where these guys are going wrong and why these guys are making not enough money, which they should. And when we took out the error list, we come to know that they are making silly mistakes in the market. It is not because that they are not following any hard science. It is because of silly mistakes, the simple mistakes that they are making in the market. So we decided to work on the same, to send the message to the each and every segment, every participant of the market, that how the market is simple and how we people are making it difficult. See, market always works on the simple theories. We need not have to go for the extraordinary science. Even if you go through with the books of Warren Buffett, you will come to know that he always banks on the simple theories. And the same thing that we are going to introduce in this book. I will not take much time, but I will just summarize the few points on which you people have to concentrate and while reading. There are the whole book is very interesting and it is very important for each and every segment. But in my sense, I think the page number 26, 29, 115, 216 are very important pages which you cannot skip. First, I will move to the fundamental side, like what are the important points that we can always concentrate and how simply we can take investment approach in the market. The first important point that I just want to highlight here is the bottom-up investment approach. What is bottom-up investment approach? Very simple. If you cannot take a concrete call on the economy, then you have to look for stock-specific action. Remember the times of 2008 when there was very clear vertical sell-off in the market. And that time everyone was confused, highly confused that where the economy is going. But in that kind of market, you can take a stock-specific call. There are a number of stocks on which you can confidently say that these companies are very strong and they can prove best in the long run. For example, Infosys. Since 2000, the company is giving the quarterly numbers which they guides in the previous quarter. What I mean to say here is that this company is very clear in its vision. They have very strong understanding about their business and the next future of the company. So without any using any hard science, you can invest in any specific stock. See, there are a lot of stocks, but see why I have chosen this company is because the strong visionary company. And since 2000, the company is having such a strong record that you cannot miss the opportunity if there is any unexpected crash in the market. Just go and buy the stock. Then if we go through with these sectors, which are the sectors on which you can use bottom-up approach, then I can say that IT, pharma and FMCG, in which the cash flow is very clear and certain for next say like 10-15 years. And on these stocks, always you can invest if there is a any misunderstanding or say like if you cannot take a call on the economy. And we have seen very smart return out of pharma stocks, out of IT stocks, out of FMCG stocks after 2008. But till now, we have not seen dramatic returns out of, say, like commodity or oil and gas companies. Why? Because till now, the big investors, fund managers are confused to take a bigger call on the economy. Then I will move to the top-down investment approach. See, what is top-down investment approach? Again, it is very simple. If you can take a concrete call on the economy, remember the times of 2005, 2006, when there was very clear call on the economy that the market is going to go up. Why? Because the economy is going to do well. Not only the India, but across all the parts of the world, the economy was booming. Even though there was rising trend of the crude interest rates, the market was booming. And in that kind of situation, you can take a very simple call on those stocks which are parallel to the economy. What are those? Simple. They are commodities, infrastructure, on which you can take a concrete call because they are always parallel to the overall trend of the economy. So, on the fundamental side, if you can keep this, say, like two approach, and if you use this two approach simply, accordingly, as per the time, you can make very good money out of it.